Good afternoon, traders and investors. Will back here with another one, coming to you with a Monday market recap. Hope all of you had a very nice day of trading today, and a very happy start to the holiday season to each and every one of you as well. And in today's markets, guys, well, we got bounce day number 2. Bulls clawing back a little bit more of the damage done by Jerome Powell over the course of the last Wednesday session. Now, in terms of the market breadth, well, the market breadth was not as good as we were expecting, still a little bit concerning. However, today, we did have one sector that came alive in a very big way, and that sector has been muted for the past 3 months. And of course, that was semiconductors, really carrying a bunch of names higher today. So nice to see them coming to join the party. Now, this is before the Santa Claus rally, of course. Santa Claus rally is the last 5 trading days of the month of December and the first 2 days of the month of January. That means that we start the technical Santa Claus rally over the course of the day tomorrow. Tomorrow is a half day of trading. The market stops at 1 p.m. Eastern, and Wednesday, of course, is the holiday. And then we get to see each other all back here on the Thursday session to conclude the week. So all in all, not a bad day of trading, guys. In today's video, we're going to do a few things together. Number one, we are going to go over one company earnings that had earnings last week, and that of course is Micron. Micron having earnings last Wednesday and dropping the most that they ever had in a single day since 2020. So we will take a look at Micron earnings and see what exactly was the problem for the company, and is the outlook for next year potentially a lot better than some people are expecting. In terms of thereafter, we're going to take a look at our major technical analysis rundown of our major stock market indexes, followed by our big tech names, of course, see how those are shaping up, because those had some very nice gains today and carried the market on their backs once again. And then lastly, of course, take a brief look into my portfolio for a few trades made today and what I am keeping into the remainder of the week. So should be a very fun video, guys. Let's jump right into the action, shall we? So the SPY up a very cool 0.6%. The QQ's up a very nice 0.81%. But when you take a look at the market breadth, this was a problem for a majority of the day. The bottom half of the market, guys, really only came alive in the last 2-3 hours of trading. When we started off this morning, it was a case of big tech carrying everything higher and everything else basically doing a whole lot of nothing. But it did come alive in the end of the day, and that was nice to see. So market breadth still a little bit concerned. Market still quite top heavy, but we can possibly be seeing some form of mean reversion come in the bottom half of the market, because they have been oversold now for the last 2.5 weeks, and that will not last forever. So we would like to see some continued rotation into the bottom half of the market. Semiconductors, the bright point of the day. Look at all of this green. This sector has been challenging, to say the least, over the course of the last 3 months. We will see 1 day worth of big green is not much. We know they have to clear a few key levels, and we'll take a look at that in just a few short minutes after the Micron earnings. In terms of the 1 day relative on the group performance, you can see that everything pretty much coming up into the end of the day. The only thing coming back was consumer defensive, led to the downside by Walmart and Costco, two of the major weights in that sector. Not looking too bad, but I'll remind you, Jerome Powell did a lot of damage, because on the 1 week, we are still negative all across the board. So even though it was a nice day of bounce today, the bulls still have a lot of work to do. So before we get into more technical analysis, guys, let us dive into those Micron earnings right away. And honestly, they were not that bad. So take a look at Micron here. After their earnings, the stock coming down, anywhere from 15 all the way down to 20% at the lows. And I think that this was a bit of an overreaction, in my humble opinion. Before we get into the numbers here, guys, I just want to remind you of the context. What was affecting Micron? Because this quarter, they did quite well. You can see here they beat on EPS by 1.5. They had a slight tiny miss on revenue. What was the problems with Micron since 2023? Well, of course, this is another company in a very cyclical industry. We know that there was a lot of pull forward demand for personal computing and electronic devices in 2020 and 2021. Look at this ramp in EPS those 2 years. Look at this ramp in revenue. And then we had the fall off as consumers had pretty much bought everything they wanted to buy in terms of electronics, in terms of cars as well. And then we had the slowdown, but now the company should be returning to some fantastic growth, helped largely by the AI infrastructure ramp from data centers, of course. So those were the problems from 2023. Smartphone and PC slowdown. China firms were banned from buying, which did slow down a little bit of the output from this company. And they did a huge amount of capital expenditures to build new factories for their ramp up in 25, 26, and 27. And all of that had crushed profits. So now what we seek to do, every single one of these earnings, Are we currently at the rounding of the bottom for Micron? Are things going to be better moving forward, or are they going to be getting worse? That's what we want to see. We want to take a look at the profits. How are the profits doing? And we also want to take a look at the demand and when the company forecasts the demand to be returning. So with all that said, let's jump into the earnings, shall we? So Micron shares suffer steepest drop since 2020 after disappointing guidance. Let's have a look, shall we? So in terms of what happened there, right? Weaker expected guidance for the second quarter and a further delay in the PC refresh cycle, and cited pockets of elevated customer inventory in smartphones, basically meaning that the markets are not quite back in all of Micron's lines of businesses yet. Data center revenue jumped 400%. However, that was fantastic. Let's dive into it, shall we? So for the second quarter, Micron said it expects the quarter moving forward revenue of $7.9 billion plus or minus $200 million and adjusted earnings per share of $1.43 plus or minus 10 cents. This is why the stock was down a lot, guys. They missed guidance, and they didn't miss it by a small margin. They missed it by a very wide margin. Analysts were expecting almost $9 billion. That's a miss of about 10-12% on revenue. And EPS, look at this miss on EPS, guys. This is a miss of pretty much 20-25% in line with, or rather in relation to the estimates. That is why the stock was down a tremendous amount. But I think it's a little bit of an overreaction because the future for Micron looks pretty good. So let's look into that right now, shall we? The CEO said that they are seeing slower growth in parts of consumer devices and is experiencing inventory adjustments. So their customers not willing to load up on inventory just yet because they're still trying to push out the same inventory that they've held since late 23 and 2024, as consumers are just not buying the sheer amount of, iPhones, Android phones, PCs, tablets, PlayStation, stuff like that, right? And even vehicles, because Micron manufactures a lot of components for vehicles. And we know that auto sales have been trending down as well since the later portion of 2022 as interest rates moved higher. Micron expects further delay in PC refresh cycle and cited pockets of elevated customer inventory in smartphones. We already read that. Revenue, however, jumped 84% from a year earlier to 8.71, which met the estimates. 400% increase in data center revenue due largely to the demand for artificial intelligence. And here's where we have to identify what we like to call a secular trend. Do you guys think that AI is going to be bigger in the future or smaller? Most likely bigger, right? So Micron is attacking the most hyped area right now in terms of infrastructure build out. As you can see, in that sector as a whole, they are outperforming by a very wide margin, and they have the best products on the marketplace right now. We'll take a look at that in just a few short moments. We continue to gain share in the highest margin and strategically important parts of the market, which is what we just said, and are exceptionally well positioned to leverage AI-driven growth to create substantial value for all stakeholders. They, of course, are talking about their DRAM products and their products for data centers. Micron manufactures the fastest DRAM possibly available on the market. Not only is it the fastest and best performing, but it also consumes the least amount of energy, something that a lot of the hyperscalers want to see. Now, let's take a look at a few of their earnings slides, shall we? So the data center revenue over 400%, we saw that, and 40% quarter over quarter. That is nuts. Data center revenue mix now surpassing 50% of Micron's revenue for the first time. So having a bit of the same sales profile that NVIDIA has right now, where more of their revenue is going towards data centers. And that's a good thing because the consumer component of the business is lagging behind. So it's nice to see them excel in the portion of the business that there's the most demand for right now. Now, the HBM, high bandwidth memory, listen to this, total addressable market of that is going to grow 4 times from the 16 billion level it was just this year to exceed 100 billion by 2030. That is absolutely massive, guys. So you can see that Micron is not done growing and their addressable market is not done growing either. Huge addressable market for them to go and take. Now, the leading edge DRAM supply remains tight, driven by robust demand in data center DRAM, including the HBM, which will underpin our business results through fiscal and calendar 2025. So what are they talking about when they say DRAM? Well, DRAM is a special type of RAM, guys, that goes into any device that is using AI plugins. Think of Apple iPhones, think of tablets, think especially of the new laptops and PCs, which are going to be AI compatible. Now, Micron is the lead supplier of this for the entire market. However, as we heard from Dell, we heard from HP, we even heard from Microsoft in these last quarterly earnings a few weeks ago at this point in time, they were all saying, well, the demand for these products is good initially because they're brand new products, but the demand is nowhere near as being as high as it was in 2020 and 2021. So people still not going and embarking on that refresh cycle as consumers remain a little bit cautious about their spending right now. Let's move on further, shall we? So stronger bit shipments in the second fiscal half of calendar 2025. There is your guidance, guys. They expect the consumers to resume their spending patterns more towards the later part of 2025. So I think Micron is still an amazing stock right now, but a lot of that lift from the consumer segment is only going to come late 2025. They're on track to achieve the HBM targets and deliver a substantial record in Micron revenue, significantly improved profitability. There it is, guys. They crushed profits in the past, and now we have guidance for record profitability and positive free cash flow in fiscal 2025. That is very important too, because when you talk about making a lot of investments here into new factories, the free cash flow got crushed. As you can see, Micron used to be a company that brought in over $2-3 billion of free cash flow per year. They invested so much money in facilities in 23 that it actually went negative in terms of free cash flow. And we can see here, 2024, so far, the year just concluded for them, and they have almost no free cash flow to speak of because of the fact that they've still been investing so heavily into their future, which is a very good thing, especially when you're an industry leader. So let's continue. They see significant improved profitability. That is number one I'm looking for, and a positive free cash flow to return in this upcoming fiscal year. Two things now that I was looking for, and the company has given good guidance on. So looking very good. Now let's move on a little bit further. We'll tackle a few of their segments and then we're done. So data center, we continue to receive positive feedback from our leading customers from Micron's HBM3E, best-in-class power consumption, 20% lower than the competition's, even as the Micron product delivers 50% higher memory capacity and industry-leading performance. So better performance and also consumes less energy. That is exactly what these hyperscalers want to see. We expect Micron's next edition of the HBM4, will maintain time to market and power efficiency leadership while boosting performance by another 50% over the current edition right now. Extremely solid, guys. High volume ramp for calendar 2026. So that is really going to be it, guys. 25 and 26 are going to be Micron's years. For now, we may want to remain a little bit patient, but this is why I'm going to start accumulating Micron shares now because of this insane guidance that is coming 2025 and 2026. Let's move on. PC, one of their slower segments. AI PCs will require additional DRAM content with a minimum of 16 gigs for DRAM for entry-level PCs and 24 gigabytes for above higher end segments versus the 12 gigabyte average for PC content last year. What does this mean? More Micron chips to all of the people who manufacture PCs, Dell, Lenovo, HP, Microsoft, etc., etc., etc. Apple as well, potentially, right? So a lot more to come from them. They will be stronger in 2025. Windows 10 end of life cycle in October 2025, also providing a catalyst for a refresh cycle. We expect the PC markets to units to grow in the mid-single digit percentage range in 2025, with growth weighted towards the second half of the calendar year. So they've been wrapping up data centers fine, but you can see the PC segment is still not what it was. Mobile, exactly the same. Low single digit percentage growth in 2025. Automotive, exactly the same as well. Lower than expected automotive unit production combined with a shift towards value trim vehicles from premium models and away from EVs has slowed memory and storage content growth and resulted in inventory adjustments at OEMs. Basically what it means, car manufacturers are selling less cars, and as a result, Micron is not exporting as many products to those manufacturers as previously they did when people were buying cars, pretty much willy-nilly back in 2020, 2021, and 2022 when interest rates were still relatively low. Recovery for that market as well later in 2025. So I think you get the gist of things, right? For their data center revenue, that'll be streamlined up and to the right over the next 2, 3, 4, 5 years. The total addressable market is huge, but for these consumer segments, guys, which still represent 50% of the revenue, they do not expect those to come back in a meaningful way until the end of 2025. Essentially what that means is, yes, they are rounding the corner to the end of their cyclicality, which is exactly where we want to be picking up some of these companies, especially ones of cyclical natures. So now let's dive into some of the fundamentals, shall we? So Micron, extremely solid company, guys. Nothing to say. I mean, they did take on a little bit more debt, as you can see here, to ramp up those factories. They doubled their debt essentially. But in terms of the revenue that the company brings in per year, I do not think this balance sheet is a problem. Yes, their free cash flow got squeezed, but it's going towards positive things. It's not just going to sales and marketing, guys. They're building a tremendous amount of factories. They're going to employ a ton of new people and just pump out some of the best products in the market. So moving on further, as we can see, guys, well, the analyst expectation on average is about $133, well above the current share price right now. Everybody, almost everybody, has a buy or a strong rating on the stock, strong buy rating on the stock. EPS, you can see, guys, massive ramp back to well above what we were in 2022 for the next year and 2026. And revenue largely the same as well. Massive ramp above what we were doing back in 2022. So looking very attractive there as well. Take a look at the profit margins too. Take a look down here, right? We know that this was a problem for Micron, 23 and 2024, very slim or even negative profit margins in 23. Look at these last two quarters. Last quarter, 11.5% net margins, better than the last 2 years. And now this most recent quarter, 21.5% net margins. So the company's margins are coming back. Take a look here. This is profit margin history. Gross margin, top of the screen right there. Now we are coming roaring back. Operating margins, same thing, coming roaring back, and net margins as well, coming roaring back. So two of the things that I was concerned about, EPS and bottom line net margins, are now coming back in a very big way. So I do think that Micron is poised for a very nice recovery in that aspect. Taking a look at the fundamental valuation right now, the EPS for 2025 is $7.52. That gives us a forward price to earnings ratio at $90 of 12. Yes, only a 12. This company is dirt cheap in my opinion. And when we divide this by the EPS growth rate, which is a fantastic 50%, we get a PEG ratio of 0.24. Anything under 1 is really cheap. Anything between 1 and 2 is okay. Above 2 is expensive, guys. At 0.24, in my opinion, this is a steal. However, we know that a lot of that revenue and EPS is going to come in the back half of 2025. So what I will be doing personally is I'm going to start accumulating some Micron positions for that thesis into late 25 and early 2026, when I do believe this company will have no problem putting in probably a 2x, guys, from the current price points. I would not be surprised. 150 all the way up to 180 over the next 12 to 18 months is fair game for this company. They are trading at a ridiculously cheap multiple right now. And even in terms of the technicals, guys, we are currently in the biggest area of support that we have. Prior all-time high resistance from 2021 is now massive support for the bulls. The weekly 200 EMA, is down here in the low 80s, looking like a fantastic area for myself to start averaging into this position and building into the thesis for late 2025 and into 2026 as they continue attacking the data center market, but also when consumer electronics start coming back, guys. In my opinion, this company is going to be firing on all cylinders and could have some very nice outperformance in the future. So that is pretty much everything for Micron earnings, guys. Hopefully you appreciated that. Now let's dive right into the technicals, shall we? So in terms of the technicals, guys, I mean, we are having a very, very slow week, right? No surprise there. If you guys want me to throw on the volume, look how low volume we got today on the SPY. Look at this day. Terrible volume, right? Extremely small volume. Now, this could mean that we're going to have some very volatile moves potentially, right? Doesn't mean that because we have low volume, the market's not going to go anywhere. If we do have very big moves, there may not be anybody to take the other side of that trade. And that's where you can get these very large whipsaw moves over the course of the next few days. So even though it is supposed to be the Santa Claus rally, I still would issue a little bit of caution in terms of positioning for trades. Not the time to be chasing the market, because you would be surprised how quickly they can reverse things intraday. Now, moving into the technicals, so to speak, guys, well, the SPY, we know they were up, but the components of the SPY is what matters. What were some of our concerns as of recently? Well, the concerns were that the market was not broad, right? I'll remind you what the outlook from last week was. Even last month, right? Only big tech has been carrying the market. Everything else has been basically doing a whole lot of nothing. Has that improved over the course of the last 2 trading sessions? Here's the percentage of stocks above their 50-day EMA. you can see it is still only 32.76%. We are at the lower end of the range right now. Technically speaking, it is a buying opportunity in this whole range, but it doesn't mean this is the bottom. It can go lower, and this market breadth can indeed get a little bit worse before it gets better. However, we are in some sort of a bottoming out process. It's just we have not put in a lot of work in the last 2 days. Even though the market looks like it's bouncing, it's not bouncing everywhere. Percentage of stocks above their 200-day moving average still staying planted here at about 52, which is a healthy read overall. It's the lowest reads that we've had in the last year, but you can see when things get really bad, like last October, we can go down in the 30s. Now, I'm not saying we're going to go down there. I'm just saying we are still weak, and after a few short days of bounce, it is not the everything bounce just yet. However, as I was showing in the prior video, right, smart money versus dumb money, as measured by the Friday read, you can see somebody is stepping in here in a big way, and that is definitely the institutions. Take a look at the bottom. The bottom to you guys, this will be on my right, it'll be on the right of me, right? Take a look down here, all the way down here. Your smart money is starting to buy heavily, right? At that point in time, oops, I clicked the wrong button. So the smart money is starting to buy this in a very big way, and I would not be surprised if they continue as retail continues to panic sell their bags. Smart money institutions are here picking up the slack. That is where your big bounce is coming from, because it's definitely not coming from retail. I think they got a little bit nervous. So all in all, we are catching some bids down here, but the market overall is not as broad as we would like to see. So I still do issue a little bit of a tone of caution approaching these markets. That being said, daily downtrend is still underway, looking for a lower high for then the bulls to reset the daily uptrend pattern. But as of now, the expectation is just a lower high. Overhead resistance right now staying put, $596 up to about $600. And the size of the bounce right now, guys, is pretty good. It's about a 50% retracement size. If we continue bouncing even more, it gives the bulls the best opportunity at trying to reset this into a new daily uptrend. However, if we roll over from here, it is anybody's game, guys. The bears can very easily take it back to the lows, flush the lows, send us into further daily downtrend consolidation, and our support level remains put 585 down to about 576. So keep that in mind on the SPY, guys. Still very nice bounce, but a lot of work left for the bulls to get the daily uptrend back and put an end to this weekly consolidation that we've been having. We know that we've almost lost the weekly higher lows by closing below here, but they were able to get it back on the Friday session. So still in a weekly uptrend, but the bulls have a lot of work to do to get the weekly momentum back, because now the momentum is kind of a push and pull. Moving on to the Qs right now. So the Qs, a little bit easier analysis because we have not lost any major levels. That being said, we did have a nice daily uptrend here, got the flush after Jerome Powell. Now the bears possibly looking for a lower high, and then depending on the size of the bounce, can they follow through for lower, or will we just end up resetting into a brand new daily uptrend with the Santa Claus rally? Well, that is where we look at the size of the bounce, of course. Size of the bounce right now, almost up to 50%. Keep an eye on the short-term timeframes, guys. We still have not caught the hourly uptrend. This is a very nice bounce, but it is not an hourly uptrend. You need to break the highs of Friday for it to be a confirmed hourly uptrend and confirmation that your bounce still has a little bit more legs in terms of the daily and bringing us higher and higher into these fib levels. I would like to see 50% close or 618. That will be 528 on the SPY. If we can get up to the 618, the bulls are looking very good for a chance at getting the daily uptrend back. But as of right now, guys, still anybody's game. If we roll over, you guys know exactly where we're heading. We're heading right back down to the support area right down there. 515 down to 510. Moving on to XLF right now. So XLF finally starting to catch a little bit of a bid. It was not looking the best this morning, but now 2 green days in a row. Hourly, the daily RSI was oversold mid last week, but we know who's in control right here. It is definitely the bears, right? Big daily downtrend right now. We will keep an eye on the size of the bounce, but as you guys can see, the size of the bounce right now is quite weak, not even a 50% bounce. So in the event we start rolling over on the short-term time frame, such as the 1 hour, you can see not a 1 hour uptrend just yet. Need to break the high of Friday. If we roll this over into more hourly downtrend, and we've only got a 38.2% bounce on the daily, what do you guys think is going to be the likely scenario? Well, the likely scenario is most likely the rollover, the retest of the lows, and possibly breach, right? So keep that in mind for XLF. The bounce size is nice right now, reacting from support, $47.70 down to about $47. And if we crack down a little bit further, well, at least the bulls do have a decent amount of support below us. Anything pretty much above 46. Going to be looking for a weekly higher low for possible further trend continuation. But the more they take back of this move, the more the chances are we go into an extended tightening range, or worst case scenario, the weekly downtrend. As of right now, the bulls have not lost the weekly uptrend. The next few days of trading are going to be absolutely crucial to this sector. Moving on to healthcare right now. Healthcare up 0.54%. Finally catching a little bit of a bounce here on healthcare, guys. But as we said with financials, right? 1 day's worth of bounce is not enough. Massive daily downtrend right now. So we will be measuring the size of this bounce, because as of right now, the bounce is meaningless at this point in time. Only a 23.6. So if you roll over the hourly time frame, right? Still not an hourly uptrend with the rest of the market. If we roll this over into a lower low, what do you guys think is going to happen? If we can only put in a 20% bounce on the daily, do you think the bulls have a good chance of resetting the daily uptrend? Or do you think the likelihood increases of the bear rollover into furtherance of the daily downtrend? Obviously the latter, right? Daily downtrend is higher probability, so we'll keep a close eye on the size of the bounce. They're bouncing from the correct location, however, right now. This is the big support range, 141 down to about 134, which is prior resistance for about 2 years of time, 2021 through 2023. So it should be acting as big support, and they are. Now we need to get the follow through, because we know it's still in the context of a big weekly downtrend. So I really need, guys, I need a very, very large bounce on the daily uptrend, and then I need the bulls to recapture a lot of this on the weekly time frame and go for the trend change there too. You see the size of this bounce? It was good, right? And still didn't matter. So now they need to start everything from scratch and try it again. Not looking too bad though. I am starting to position in one of my favorite companies in healthcare, which is UNH. So far we positioned for a trade last Friday. So far we're up, but not out of the woods just yet, guys. A lot of momentum. Gonna need the bulls to put in a heck of a bounce if you want to reverse this weekly time frame. Now moving into the one sector that got a ton of love today, but really didn't do much. This is why I say 1 day worth of bounce, guys, doesn't mean anything. You need to get the trend follow through. Take a look at semiconductors. Still a sideways range trapped between two levels. Overhead resistance 260 down to 250, and below support 232 down to about 218. That being said, the bulls are looking good, but we have not broken the highs of this tight little range nor the lows. So we are trapped. No valid price action right now. No clear trend. What you need to see from the bulls, if you really want to see semiconductors go on the rip that everybody thinks that they deserve, well, first things first, need to break 252, and then need to get the daily uptrend and close the daily uptrend and the weekly candle above these guys right here, 261. If I see a weekly close above 261, suffice to say that I think that is going to be it. That is when we're going to be moving towards the all-time highs. Not ready just yet. The MACD still has not crossed, but you can tell something is brewing in the semiconductor industry. And when you keep seeing days like this, NVIDIA, AVGO, the top tier companies going up, and now we're starting to pull everybody else as well, this possibly could be the start of it. But we know we've been faked out how many times so far? A bunch of times so far. So I'm not going to call it until I see that breaking close above 261 with a weekly candle close. Moving on to the IWM Russell. So the Russell as well, muted today, 0.23% to the downside. And I bring this up almost every single video, but I want you guys to understand what's happening with the small caps here, because it's fairly obvious, right? Well, the sector weightings of the IWM, 17% financials, 16 industrials, 16 healthcare, and only 14 tech. And when your heat map looks like this, industrials flat, healthcare, okay, they finally had a bounce. Financials did well, but still nothing meaningful, right? So the Russell will not run until the rest of the market is more broad. Look at the Dow Jones. It's the same problem, right? You compare the Russell with the value index, guys. The value index, IVE. The charts look the exact same. Why is that the case? Well, because those defensive sectors as a whole, they have the exact same weighting as the Russell does. It's just the Russell has small cap companies, and those other ones that I showed you, like IVE, well, they have the large cap companies, but the weighting is largely the same across the two products. So the Russell still not performing too well. And one of the byproducts, or one of the reasons for that, of course, is the rapid increase in the 10 and 20-year yields, which Jerome Powell definitely did not help in last week's meeting. So you guys know the drill. When long-term yields are high, the companies in the Russell have to borrow at higher and higher rates, and since a lot of them are not profitable, it squeezes their margins and keeps them low. That being said, we obviously know the context right now is a massive daily downtrend, and the most recent leg of which is this guy right here, 235. So a bounce would be nice, but a lot of work to do, guys. Overhead resistance, 231 down to about 225. That is the area that we crossed prior all the way back here, 2021, 2022 highs. We are now back below it. We have now also lost the weekly uptrend. It is a rollover, but not a downtrend just yet. That would be lower high into lower low. So right now we are on the scout for a bounce, the same as all the other sectors, guys. Measure the size of the bounce. And as of right now, the bounce is not too strong. Take a look. No hourly confirmed uptrend just yet. When you do get it, you measure the size of the bounce on the daily. And if we roll over right here, guys, if the hourly tomorrow and the day after, right, Thursday, if we start rolling over, what do you think is going to happen with such a weak bounce on the daily? Do you think the bulls have a good chance of stopping there and resetting? Or do you think they're just going to get steamrolled by the bears and go into the actual next level of support, 216 down to 208? Well, they're probably going to get steamrolled. So that's why the size of the bounce matters a lot. That being said, if we pull back down into this lower area, 216 to 207, this is where I will possibly be making a second attempt at this trade. I tried to go for the actual breakout trade when we were through here and looking good. It worked for a while, and then we kind of rolled it over. So if I make a second attempt, it will be down here. We'll be a little bit more patient on that. Now, moving into the Dow Jones, lastly, Dow Jones up about 6.16%. Same concept as the Russell, guys. Daily uptrend was nice, but now we rolled it all over. So look at the size of this move down. The bulls are going to need a heck of a bounce, guys. And when we talk about a heck of a bounce, I'm not talking about this. This is a 23% bounce. Once again, if we roll over the hourly time frame, because as of right now, it is not a confirmed hourly uptrend. If we roll this over into a lower low, do you guys think the bulls have a good possibility of stopping the damage there? Or because of all this pressure, do you think we have a good chance of rolling over? Well, most likely the rollover, right? And if we do roll over, the next stop is 42,000 flat, and then all the way down to roughly here, 41,300. So we'll keep an eye on the size of the bounce if the bulls can keep bouncing and see, can they set themselves up nicely for a daily trend change? Or will the bears just continue putting pressure here on the weekly and send us further and further into this guy, which is the 42K support line, or the last line of defense down here, which is 41,300. That is going to be looking for a monthly higher low at this point. A lot of space though, anything above 38.6, looking for a monthly higher low for further trend continuation. So might need to be a little bit patient, guys. I'm not ready to call it either way just yet. Need to see the size of the bounces, guys. I'm not in the business of predicting the market. I'm in the business of studying the price action, and depending on the price action that we are giving, we can position accordingly, right? That is why we do not catch falling knives. I'm not looking to catch a falling knife. I'm waiting for a confirmation of a daily uptrend. Entry goes here, stop loss goes there, and then you go for the expansion. But trading without confirmation, guys, is a fool's errand. Now, moving on, guys, let's move on a bit further. Let's go into Bitcoin and crypto. So Bitcoin continues to be weak, guys. As I was kind of, hinting at as of last Friday's video, I would not be surprised since we flushed this range right here, 101 down to about 98. If we flush, we're retesting this previous resistance, which was then support. When we're under it, becomes resistance again. Look, it looks completely natural, doesn't it? Low, lower high, and now where are we going, guys? Possibly going back to test the 91 down to 86,000 region, which is the prior support range from back here. So Bitcoin remains in a daily downtrend, remains also in a form of weekly consolidation. They were struggling to get above 100. They finally did it, and then Jerome Powell kind of ruined the party. So now we're just looking for a little bit of weekly higher lows at this point in time. Anything above 66, guys. There's so much space on this chart. I don't know why anybody's nervous. Anything above 66 is just looking for a weekly higher low for further trend continuation. And look, we have a little bit of confluence. All of these lows, 91K down to 87. And look who is there as well. Our little friend, the 12 EMA. So this could possibly be the area where Bitcoin starts to find a little bit more support and a little bit more bottom out action. And as well, the same goes for trades like this. MSTR will not turn around until Bitcoin reaches its true bottom. Coinbase, one that's been heavily used as a proxy for trading Bitcoin, will not turn around, even though it's a separate company, it has its own fundamentals, it will not turn around. Robinhood, same concept as well. Had a good bounce, but still struggling today. You guys notice a pattern here? And the same for the miners, of course, like Mara and Riot, will not turn around until Bitcoin finds a local bottom. So that is pretty much everything for Bitcoin. Now, we just closed a very nice day in terms of altcoins. Just about an hour ago, you can see that they did put in a lot of bounces, but altcoins remain the exact same, guys. Study this chart right here, the Bitcoin dominance chart, if I can actually get it right. So Bitcoin.D, BTC.D, Bitcoin dominance. How much of a percentage of Bitcoin does Bitcoin's weight represent in the entire landscape of crypto? Similar to how much of the whole S&P, Microsoft, or Apple represents. This is the chart for how much Bitcoin represents in all of crypto. What we're looking for here for the altcoin rally is continuous weekly downtrends. Now, the lower high is set, as we can see here on the weekly, right? 2 years, guys, 2-year uptrend. Bitcoin was leading the way and everything else was doing a whole lot of nothing. Now the trends are shifting. We have a lower high on the dominance. If we can conclude with lower lows and lower lows, this was the case, guys. Bitcoin was red all day, but look at some of the bounces in crypto, right? Because I don't have them up right now. So Bitcoin was down all day, but Ethereum was green. Cardano was green. If you go through this entire list that I have right here, all of them were green and big green a lot throughout the day. So that is why Bitcoin dominance continues to be the biggest thing that I am watching right now. It doesn't mean that Bitcoin, if BTC.D goes down, doesn't mean Bitcoin's going to just go down. It just means that Bitcoin is either going to go down slightly or be flat and everything else is going to rally a lot more. Or Bitcoin can even go up, but everything else is going to go up a lot more. It is, in my opinion, the start of the altcoin season. But once again, you have to be patient. You have to be prudent as well, especially if you're trading on leverage. Ethereum, on the other hand, losing everything. Daily downtrend is now underway. We'll be looking for the daily uptrend recapture, but it's not looking the best. We're kind of in no man's land right here. The next big area of support, well, next big one. The next small area of support is down here, roughly 32, where we bounced from before, all the way down to 3K. The biggest one, of course, is lower, but I do think that the bulls might put a stop to it if we come down 32 down to 31. Not looking the greatest, but then again, the weeklies still have a lot of space here, guys, at this point in time. Anything above 24, just looking for a weekly higher low for possible trend continuation when Bitcoin can find its own local bottom. That's everything for crypto. Now let's move into big tech and then our portfolio, and then we're done. And try to keep this one as short as possible, as I promised I would. So that's what we're going to do. So now moving into Apple. Apple up about 0.31% today, looking very good. Daily uptrend is clear as day, right? No secret there. Daily uptrend is clear as day for Apple. At this point, any single move lower, looking for a higher low. Anything above 245, looking for a higher low for further trend continuation. And in the event that Apple rolls everything over, you guys know what's going to happen, right? We are going for the weekly higher lows. It's been a very nice 6-7 week rally on Apple. They cannot do it forever though. However, if we do start pulling back, the RSI is at 73 on the weekly right now. In the event we start pulling back, you guys know what we're expecting, right? Anything above 220, looking for a weekly higher low for further trend continuation. So although Apple is looking very good right now, the bulls are in full control, I do not believe that there's any meaningful trades right now in terms of favorable risk to reward. We are very high both on the daily and the weekly RSI, and also the valuation of the company here at 250 should be about a 3.5 peg. So everything, we have a confluence of everything being too expensive right now. The RSI is too expensive, the valuation is too expensive, so that's why Apple is not on my trade list for now. But if we do pull back, I may be willing to consider it. I have some long-term Apple shares. I'm not selling any shares. It's just I'm not buying more. I'm just holding for now, and no decent swing trade opportunities in my humble opinion. It's just too far extended. Moving on to AMD right now. Give me a very brief moment. So AMD coming alive, 4.52% is the bottom in. Well, if you guys listen to my index analysis, you will know that it is too soon to tell. Why? Because we have a daily downtrend and this is only 1 day's worth of bounce. I'll remind you what the context is as a whole, right? Monthly is one massive downtrend. On the weekly as well is still one massive weekly downtrend. On the daily is still one massive daily downtrend. So the bulls need to start absolutely everything from scratch. So 1 day's worth of bounce is not enough. It is a very decent start because now you put the fibs on this and you'll see the bounce size is roughly right now about 50%. That is very good. They almost made it up to 618. If we can get above or close above 618, that'll be a very good start to the bounce on AMD and could give the bulls a glorious opportunity to reset into some higher lows, right? Possibly reset into some higher lows and change the daily trend back to the bulls. Now, that being said, guys, right, that is just step number 1, is securing the daily uptrend. Step number 2 is taking that daily uptrend and moving into the weekly highs around here, around 143, and doing the same thing. Can we bounce enough to regain the weekly time frame? So you want to see the bulls bounce, but in the event that today was just a fluke and that they roll over once again into a new leg of daily downtrend, just understand the location down here is the last line of defense, 115 down to roughly 104. That's a big level, guys. It is not only the 200 weekly EMA right here, this green line that's moving through here, it is also the previous level of support, which was back here in 2023. That is the last line of defense, 115 down to roughly, let's call it 100, right? That whole area. As of right now, I am starting to bid on AMD. I am playing short puts under the market, but I also have loaded up some leap calls. maybe contemplating further positions, because I do believe right now, guys, the valuation of this company is extremely, extremely attractive. A dollar or peg is 1.07. That is extremely cheap for a company growing this at these metrics, improving their free cash flow, improving net margins over the next 2 years, and part of the data center ramp business. I believe the risk to reward is more favorable here. I'm not saying there is no risk. I'm saying the risk to reward profile is a lot more favorable here than it was at 160, at 150, at 140, and even at 135. So this is where I am starting to make some bid attempts on AMD for the longer term thesis, which is the expansion of the data center ramp into 25, 26. Look at that EPS and the revenue as well. So that is the fact of the matter for AMD. Analyst price target average is 183. So do with that what you will. I actually think it looks good. Kind of ready now for myself, of course. None of this is financial advice anyways, right? Moving on to Amazon. So Amazon up about 0.06%, not doing too bad. However, not recapturing any major levels. We know Amazon was a case in point in losing the daily uptrend, right? Daily uptrend was nice, higher lows, and now we flushed. So Amazon, same thing as the SPY, same thing as all the other indexes, need to set the hourly uptrend. They could not get it done, could not breach the high of Friday. So we will see what happens. If we fall lower, that will mean that is the end of your daily bounce. And so far, the size of the bounce, although a respectable size bounce up to 50%, it is anybody's game. It's not as if they had a 90% bounce to where we're almost positive the bulls can get it back, right? No, this is only a 50% bounce. So the odds are 50-50 right now. In the event we move lower, I'll give you the expectation because that is what everybody's wondering, right? If we move lower, where are we going? Down here to 210, down to about 215 is the area. That will be daily downtrend. And once again, I'll remind you the context. The bulls looking extremely healthy on the weekly, guys. Still looking for a weekly higher low. Anything above 196, weekly higher low for possible further trend continuation. So if this volatility in the market continues and even big tech starts coming down and dropping the levels, just understand some very solid long-term bulls will probably be sitting here for a dip buy for that weekly trend continuation into 2025, which I think is going to be a fantastic year for Amazon. Moving on to Google right now. So Google as well, up 1.57%, one of the biggest winners of today. And this is where the bounce sizes are key, guys. So notice the patterns. Daily uptrend was nice. Higher low was here. They lost the higher low. So now we're looking, of course, for a lower high and see how the bears react, right? If it's a shallow bounce, you roll over. If it's a big bounce, the bulls have a chance of getting it back. This is a very nice size bounce. Take a look at the size of this bounce. 618, guys. It's getting better and better. One more day of upside for Google. It'll come into the 65-70% bounce range. And then the bulls have a very clean shot at either the V-shape, full V-shape, or the two-step daily uptrend recovery process. Looking very good. Why do we have a bullish leaning bias? The same reason as Amazon, guys. We have a weekly uptrend right now. So even if it doesn't look, fantastic on the daily, and we can possibly roll this over as well, any rollover, guys, would just still be looking for a higher low. Anything above 165.20, higher low for further trend continuation. So keep that in mind. Reacting nicely from the previous all-time highs here, which is 191 to 187. One thing's for sure, if we revisit the low to mid 180s again, I will be heavily bidding the stock in this area. That being said, the valuation here is fantastic. What are we at? 195 right now? So I have to redo this one. Let me redo it live. The fundamentals haven't changed. It's just the price has changed, right? So let me just do this right now. 195 divided by 165, that's about 18% higher. So you just add 18% to this peg ratio, right? 0.121, and you're sitting at about 1.43 peg. 1.43 peg for Google, guys. That is literally nothing. So 1.43, let me just redo it right here at 196. I'll do the EPS later, but I mean, I guess I could do it right now. Might as well take care of it. Maybe I'll teach you guys a few things as well. The EPS has not changed. Only the stock price has changed. So 195 divided by 8.01 is looking at a 24.3 forward PE ratio, which is super, super cheap, guys. Really, really dirt cheap for Google right now. Fantastic company. Moving on to Meta. So Meta, not looking too bad. 2.5% to the upside today. I don't know why my PC is lagging. Let me just do one thing here. All right, so moving on to Meta right now. Meta is 2.5% to the upside, looking very strong, reacting nicely from the exact zone that we were counting on them to respond from, right? They tried to bounce on Friday, didn't quite work out. Now, prior resistance, current support, finally gaining some traction, right? Daily downtrend is underway. We know we're just looking for a lower high. We need to study where the lower high is going to end. That is all with the hourly trend change. As you can see, no hourly trend change. This is an hourly downtrend. We do not have the hourly trend change. You need to break the high of Friday for that to be an actual hourly trend change. If that is the case, we will then look at the size of the bounce. If the bounce size is very good, the bulls are set up nicely to convert this into a new daily uptrend, put an end to this weekly consolidation, which is also just a weekly higher low for further trend continuation. So we do have a bullish leaning bias. This is where it comes into importance, guys. As you see me do the inter-time frame analysis. How do all these time frames play together? You know that because the weekly is in an uptrend, you have a bullish leaning bias. So you know as a byproduct, if the bulls can put in on a daily a 60-70% bounce, because we have a weekly tilt bias, bullish, right? You know that the probability is usually very strong. So weekly uptrend plus a strong bounce usually leads to further price appreciation. So keep that in mind for Meta in the event they cannot get it done and roll over, because that's always a possibility. We are going back down here, 566 to 555. I will be going pretty heavy on some Meta if we do revisit that area. Moving on to Microsoft right now, down about 0.31. So unfortunately, Microsoft, one of the only companies on this entire big tech list that was red today. So Microsoft, same concept, right? As we can see, it was a very nice daily uptrend, higher low, higher high, and then unraveled, lost the daily uptrend, right? So that being said, need to study the hourly timeframes, guys. As we can see, no hourly uptrend in sight for Microsoft. We will see if they can break the high of today. Tomorrow, or maybe Thursday, we will possibly get a new hourly uptrend. Then same logic applies, guys. Need to go see how high does this bounce go, because we're just looking for a lower high, right? If the lower high is 60-70% plus, the bulls have a good chance of confirming and following through. Why? Because we have a weekly bullish leaning bias. It's a weekly uptrend. This is a breakout retest. Prior resistance is newfound support here, 435 down to about 425. So you know that when you have a weekly bullish leaning bias, you have to give the bulls the benefit of the doubt in that question, especially if they can put in a 50, 60, 70% bounce. So we will watch the size of the bounce. And if the size of the bounce is too weak and they roll over into daily downtrend, well, support is down here and there's still a lot of space on the weekly, guys. Anything above 410, still looking for a weekly higher low for further trend continuation. So study the relationships between the time frames. Very important, guys. Arguably the most important thing in all of technical analysis. Moving on to Netflix right now. Netflix up about 0.26%, but we know the context as well. Daily downtrend, looking for a bounce. As of right now, the bounce size is somewhat respectable. I'll give them that. About a 50% retracement size. Let me just blow it up so you guys can see. 50% retracement size, not the worst. If we get another leg higher into tomorrow's session or Thursday's session, that will be a 60-70% bounce. Give the bulls the best chance of recapturing the daily uptrend and putting an end simultaneously to the weekly consolidation that we've now been in for 3 weeks at a time, right? So weekly uptrend is a bullish leaning bias. We know that it is very clear as day. Weekly higher low is there, higher low. And now we're looking for a new weekly higher low. If they cannot get it done and the daily bulls, unfortunately, have a rollover right there and go further, where are we possibly coming down to here, guys? Possibly 853, where we have the 12 EMA, a lot of space, anything above 746, looking for a higher low for further trend continuation. Now let's move on to NVIDIA, shall we? NVIDIA, one of the bigger winners of the day, guys. And now we have LeBron James coming off the bench. I was saying for the longest time, guys, you cannot get this sector to rally without the star player. And now the star player is finally starting to wake up, right? We're in the championship game. We're down by 5 at halftime. And then, you know, for some reason, we've been benching LeBron James. Or if you want to take a soccer metaphor, we're down, you know, it's the World Cup. We're down 1-0 and you left Messi on the bench, right? It's not going to work, right? So you have to bring the star player in the game. When the star player comes in the game, the whole team does better, right? So take that one to the bank. Now, moving on, daily uptrend on NVIDIA. This has been set, guys. Daily uptrend, nothing to wince at, right? This is very, very big for NVIDIA. Daily uptrend, recapture of the moving averages, which we have largely been under for a very long time now, since early November, right? Recapture the daily uptrend, and now take a look, guys. Daily MACD also, this is confluence. studying the areas of confluence, reaction from support, 130 down to 125. I was calling out this area, super solid zone, daily MACD possibly curling over after being muted since early November, since their earnings. Weekly time frame. Why do we have a bullish leaning bias on the short-term time frames? Because the weekly and the monthly were always looking gorgeous, guys. Yes, it was somewhat of a weekly downtrend, but weekly downtrend into where? Super soft weekly downtrend, not this. Soft weekly downtrend into support, which on the higher time frame, the monthly, you are looking for a monthly higher low for further trend continuation. And what better area to put in a monthly higher low than exactly the prior resistance range? This is why the inter-time frame analysis matters the most. NVIDIA is looking extremely strong. I would not be surprised if the market permits, of course, if we just continue this daily uptrend grind higher and higher until we reach the all-time high. Maybe not a straight shot, but continuing to prove the haters wrong, and then people start FOMOing as it slowly approaches all-time highs. And then because of that FOMO, we start breaching in a big way. That is what NVIDIA does all the time. You see it every single time this happens, guys, right? Slow move back into the all-time highs. Boom, one candle, then what happens? FOMO, right? Here we don't quite get the all-time highs, right? The whole sector goes into consolidation for a while. Still no new all-time highs. But look, as soon as we start cracking the all-time highs, boom, FOMO kicks in. I'm expecting the exact same thing this time around on NVIDIA too. So keep your eyes peeled for that. And if we dip lower, guys, I'll just buy more. 130 down to 120 is my target area for that. Tesla looking not too bad, 2.27% to the upside, looking quite good right now, guys. Daily uptrend, looking for the daily higher low. Support below us, 410 and about 375, looking quite good if I do admit so myself. This is the previous all-time high range, which is what we're looking for here, guys. Pulling back slowly. You can see the bears are kind of losing momentum, cooled off the daily time frames on the RSI as well. Study the hourly time frame, guys. No hourly uptrend just yet. I mean, they had a little bit of one back here. But as of right now, if you continue rolling over, the daily consolidation just continues. Good thing for the bulls. They have a ton of space. Anything above 349, excuse me, looking for a daily higher low for further trend continuation. And even if we bounce from here, right? Because we never lost the trends like the other big tech names. This is still a daily uptrend. However, if we cannot make new highs and roll over lower, understand that will be a daily downtrend like a lot of the other big tech names or some of the other big tech names like Meta. And we are just going to be looking for weekly consolidation. At this point in time, anything above these guys, 332, looking for a weekly higher low for further trend continuation. Suffice to say, if Tesla comes back down into here, I will be playing short puts under the market. Could be a great breakout, retest, and run opportunity into the early portions of January, excuse me, into the inauguration, right? Which should be a favorable event for Elon. I'm not too sure how that carries into Tesla, of course. Anybody's guess. Sell the news, buy the news. At this point, guys, anybody's guess. It's trading on hype and momentum alone because it's since long decoupled from the fundamentals, such as this stock right here, Palantir, 80.69 to end the day, 0.17% to the upside. Bulls remain in full control, guys. And I know, I keep telling everybody, right, who keeps asking me, can I short it now? Can I short it now? Can I short it now? The answer is no, guys. If you don't see a daily downtrend, why would you be short, right? It's the same concept as catching a falling knife. You guys are trying to catch a rising knife, essentially, right? It's not going to work. We need to wait for confirmation. That is when you get the entry for short. You get a better defined stop loss because as of now, you are just you're crossing your fingers and hoping that these are the tops. And then every single time the bulls just come back and upset absolutely everybody, right? That being said, daily uptrend is very clear right now, and any move lower is not a short. It's looking for a higher low. Anything above 70.51 looking for a daily higher low for further trend continuation at this point in time. Only if you lose the daily uptrend into daily downtrend, well, not only number one, you have much better levels to be basing the trade off of, right? Entries here on the daily downtrend break. Stop loss goes below the most recent high, and then you start targeting the levels one after the other, of course, right? Until that happens, the bulls remain in absolute full control of this chart. The weekly as well has a bullish leaning bias. So in the event that we do lose this eventually, right? What are we going to be looking for? We're going to be looking for weekly consolidation. At this point, anything above 41. This is one single move, guys. Anything above 41, looking for a weekly higher low for further trend continuation. You can argue that it's here, but did we ever lose the daily uptrend this whole time? Never. Never even a hint of it. We have not lost the daily uptrend once this entire time. So this is indeed one very large single weekly move. When it comes to an end, you will be looking for weekly consolidation. At that point, could be maybe expecting the mid to high 60s at this point in time. And to the upside, just go with psychological numbers at this point, 90 and then 100. Congratulations to all the bulls. Palantir is looking very good right now. That is pretty much everything for our stock market analysis. Now, in terms of the portfolio, let's have a look at a few trades that we made today, of course. So number one, the one trade that you will not see in the portfolio anymore will be SoFi. So SoFi, we opened this one last Thursday. We got 50 cents for the 15 short put trade, right? Writing puts at 15. We got 50 cents for them. I closed them today at only 12 cents. Looking very good. 76% ROI in 2 days. We pulled forward literally 3% almost, guys, in premium in 2 short trading days. So the momentum stocks are fun, provided you play them in the correct way. Not too heavy, because I was willing to DCA on this one if SoFi did pull back lower, but so far so good. Now, a few of the trades that I have remaining, give me a quick second. So you guys will notice that pretty much everything is exactly the same as it was last Friday. If you want a full portfolio recap, I did it last Friday at the end of the video, spent 15 minutes describing every single one of these positions. I'm not going to do it today. Just going to show you the new position that we opened. Yes, only one. It is BITX. I benefited from the drop on BITX today. We got 30 cents for the 44 short puts. So if Bitcoin keeps dropping and assigns me down here at 44, I will gladly take those shares. That will be an additional decline on BITX, which is 2 times leveraged Bitcoin of 16%, meaning that I'm expecting Bitcoin to not drop another 8% over the course of this week. But if Bitcoin drops another 8% down to 85K, I will be very happy in picking up that Bitcoin, because that is exactly, guys, that is exactly at the lower end of my range of support. As you can see, 87, 85-ish, lower end of that range. We will be daily oversold. People will be panicking, and I will gladly pick up those shares. So that was the new trade of today. Other than that, though, there are a few trades because I have a lot of buying power tied up in this position right here. The Microsoft short put, which is the only other wheel trade for this week. I mean, we have the NVIDIAs, which we're wheeling out of right now. We have some covered calls. NVIDIA position is doing fantastic. We got a sign earlier. This one's doing fantastic. Even the Uber one we got a sign a few weeks ago is now doing very, very well in terms of coming back to our cost basis. So I have a few assignments in the portfolio. I have a ton of call options, as you can see, some swing trades on the value names that I made last week. But Microsoft is really taking up a lot of buying power, the 430s, right? 43K in buying power. So this is the only opportunity that I got into today, but there were several other ones. If you guys were looking from the top 5 options video I put out yesterday, there's a few gorgeous opportunities today. Square, a few of the members got this one, 85.84. Early in the morning, Square was down 2%, 85.84 for short puts. Very nice opportunity. Micron, another opportunity I gave yesterday in the video, right? Down here, 85, 84, 83. They were opened up early in the morning. Now Micron looking like it wants to pull up. So there was a few opportunities over the course of the day today that I gave yesterday in the video. BITX was also one of them, and I chose to go with BITX myself personally. Decent premium, but that is pretty much the new position for the day. No other new trades. A few of my leaps remain covered. As I said, if you guys want more details on the entire position list, because nothing has changed except for this BITX and the SoFi. If you want a full description, just go to last Friday's video. I spent about 15-20 minutes on it. So that's pretty much everything that we had for today's video, guys. Hopefully you appreciated that. If you did, consider dropping a like on the video. Would appreciate it for the growth of the channel. Also consider subscribing if you're new. We do these every Monday to Friday after the close. Tomorrow, guys, still undecided. If we have a very volatile day on the market, lots of red, I will make a video. I'll try to make a video, but tomorrow, of course, is Christmas Eve, spending some time with the family, of course. I'll try my best to put out a video, but no guarantees. If the market doesn't do much, guys, I probably won't do it. But if the market throws some curveball at us, I can possibly do a video tomorrow. I will keep you guys posted about that. Now, also, guys, if you have any questions, always feel free to leave them down below in the comments section. I love interacting with you guys. Thank you so much for the likes, the comments, and the subscribes, guys. Really appreciate it. You guys have made the journey tremendous so far. And in the event that you guys want to trade live with me and get all of these trade alerts in real time, not only the short puts, right? Not only the credit strategies, but also the long strategies, the calls, the short-term calls, long-term calls, leaps, the call debit spreads, share trades, stuff like that. The link to the Discord is down below in the description. We have a 30% promotion right now for Christmas, and the promotion code is Santa in all caps. I'll leave it down below in the description. 30% off your first month if you want to try out the Discord and trade with me live, get all of these trade alerts, of course, and of course, have the private morning live streams that we do Monday through Friday for about an hour or two. Chat with me all throughout the day. Ask me your questions on your stocks, your options, if you want my opinion on those. And of course, guys, the private videos that I don't talk too much about, but a lot of trading videos in here about trading strategies that I don't share on YouTube, trading psychology, how to grow your account, etc., etc., etc. And I'll just do, as I usually do, the recaps of all the trades. The check markets, the check boxes are wins, of course, right? So all the trades since the inception of the Discord 3 months ago. It's been a very good time. Obviously, past performance is not indicative of future results. I can't guarantee anything, of course. That would be bad. But however, you know, if you know me so far, very transparent about my wins, about my losses. So if it's something that interests you, coupon code down below in the description and the link there as well. Coupon code, once again, is Santa in all caps. So that's it for me, guys. Take care, enjoy the holidays, and I might see you tomorrow. Other than that, have a good one and peace.